Hello everyone, welcome to the channel where as always we give you that financial education and information. And in today's video I have a real treat for y'all. I'm going to actually show you how you can borrow money from a financial institution without any credit application or no credit involved at all. That's right, you heard it correctly. You can borrow money from a financial institution without any credit application or no credit at all. And I'm going to show this to you in a 5-step process. 5 steps, okay? So let's dive right into the information, all right? So the first thing you're going to do is you're going to find a life insurance producer or a broker or an agent that could actually set you up with a cash value life insurance. So that's the first step. Step 1 is you're going to find an agent or broker that can set up for you a cash value life insurance. Okay, so that's the first step. All right, the second step is to actually make sure that that broker is going to be, or agent is going to work with a company that's rated A or better when it comes to financial strength, when it comes to customer service, by organizations that rate life insurance company like Moody's, like AM Best companies, AM Best and Moody's. So you want to make sure that it's A or better rating. Okay, A plus is better depending on the company, but it should be at least A or better. All right. So financial strength and customer service. All right. So you want to go with a reputable company rated A or better. And typically such company is going to be one of those companies that's been around for more than a century, okay? Company that already exhibit that they have good financial strength, great customer service, and they've been through the worst of economic times in America and came out strong. So that's the type of company you want to work with. The next step is that this agent or broker is going to set up this cash value life insurance. And when I say cash value life insurance, I want to briefly let you know that I'm talking about a whole life. Just want to clarify that. Or an IUL, Index Universal Life. You can use either one of them, whole life or an Index Universal Life, okay? When you have that person set up, you want them to be structured correctly. You want it to be structured whereas you're going to be able to access 80% to 90% of your cash value in the first year. Now, typically, when you have a regular life insurance policy, a regular cash value life insurance policy set up, most of them are set up where in the first couple of years, there's zero cash value to be accessed, okay? They'll tell you it takes a while for it to build up and all that. So most policies aren't set up like this. That's why it's important to be structured correctly if you want to be able to run this play. All right, so most of them are set up like that where zero cash value in the first year, zero cash value in the second year. So if you're talking to your agent or broker and he or she said that that's not possible, we cannot do this, then it's out of two things. Either the company itself does not offer that type of product. Some companies don't. Some companies is sticking to a certain, products. They have a certain niche and they want to stick with that and they don't want to sell anything else. So maybe the company don't offer that, or B, the agent or broker just doesn't want to do it, because such policy structured like this will take away a lot of commission from the agent or broker. So it's structured more to your benefit to access cash value quicker, which is taking away a lot of money from them. So that would be the reason, okay? All right, so next, since you can borrow against that cash value 80 to 90% of the time in the first year, that's what you're going to do. You're going to borrow against it. All right, so you're going to borrow against your cash value in your policy. Okay, and let's say using that 80, let's use 80% as an example. Let's say you put in 30K. That means you have access to 24K. All right, so you're going to borrow against that, and you can do that within the first 30 days usually, especially if you're setting it up with a whole life. You can access it quicker. So you borrow against it, right? And then step number 5, pay it back. Definitely want to pay it back in a year. Okay? All right, so let's repeat those steps real quick. All right, so you're going to first find an agent or broker that could set up a cash value life insurance for you. Not every agent could do that. All right, some agents work with companies that don't do that. All right, so work with term or what have you. So you want to make sure that agent or broker is capable of setting up a policy for you, a whole life policy or an IUL that builds cash value. Second, you want to make sure they're going to work with a reputable company that's been around for over a century and that has withstand economic times, and they have financial rating of A or better and customer service rating of A or better by those institutions, or those companies, I should say, or organizations that rate life insurance companies in terms of their strength financially and their overall service, right? And then you're going to have that agent or broker set up a cash value life insurance structured where you can access 80 to 90% of the cash value within the first year. Next, you're going to borrow against that cash value within 30 days if you want to, right? In this example, you put in 30K for that year, you can access 24K. And then you want to pay that back in a year. Now, here's the sweet part, okay, with this here. The sweet part is, unlike other financial institutions that includes credit, right? If you, for whatever reason, sometimes your plan don't go as expected, for whatever reason, if that plan, let's say you borrow against that and you wanted to go invest in something that's cash flowing, whether it's a business or you just want to have a quick investment, because that's what I would suggest or recommend that you do. I wouldn't recommend borrowing against your policy to purchase any liabilities, assets only, right? So you're working on something, and let's say it didn't go out the way you planned, so you're not able to pay back within a year. The great thing is that the insurance company allows you to pay this back whenever you want. So you have that control and you have that flexibility, which you don't have. And your credit is not affected at all, unlike if you didn't pay on time with a creditor organization. You would actually be affected. You would have bad credit and bad reporting. Here, no credit is involved, so you wouldn't have to worry about it. So this provides you a lot of flexibility where if you're not able to pay back when you were hoping to pay back or when you were planning to pay back, you have extra time to actually pay back when you can over here. All right? So that's the great part of this, You can pay back whenever you want. So it gives you a lot of flexibility for you to make adjustment if your plan didn't work out as planned, right? So I hope that makes sense to you guys, and I hope that information was valuable. And as always, if it was, do me a favor and hit like and make a comment, ask questions if you have one. I always answer questions. And if you haven't already done so, make sure that you subscribe to the channel so and hit the notification bell, so whenever I drop a video, you're one of the first that's going to be notified. And share it with a friend so they can learn this information too, if you thought that this was information that they should know. All right. Also, I'm going to leave a link if you have any questions and you wanted to get a little consultation. I'll leave that link below. so you can actually schedule a consultation and see if something like this would be a good fit for you or if you qualify for it. Okay, so until next time, I'll see you soon.